What's going on, everybody? I'm here with Paperstac. We're at Note Expo 2025, and I know it's been a while, Brett. We last talked, was it maybe a year ago, at the event, and a lot of people have a lot of questions about, notes and, what's new, what's innovative, what's going on with Paperstac, and there's a lot of interesting things that we have going on. So, welcome, Brett. Let's talk a little bit about what's been going on and what's new in the note business.
New in the note business. I mean, for our world, me and TJ have been working hard on business notes.
Business notes. Yep.
Business notes is something that came across our desk. It was about a year, almost 2 years ago. But at that time, it was a different company this guy had, and then he teamed up with another guy, and they just had made it a lot bigger. And so we didn't really look that deep dive into business notes, but TJ kind of spearheaded and kind of went and I kind of passed it off to TJ, like, learn everything you can. And once we've learned more about this, it's actually a really interesting market where things I was like, how they work. And there are a lot of things, if they have a keyman policy on the person, that you get a life insurance policy on the actual business owner, you got a huge payout if they die. But if they don't, they stop paying, you got a huge personal guarantee. And I'm like, you got all these things. I'm like,
and the biggest thing I think is the support. And I was just talking to you about that. Like, the group that we're working with, Jumpstart, they're an originator of these things. Two guys came from both lending worlds. One guy came from a banking background, really knows what he's doing, really knows how to underwrite a loan really good. So that's the biggest thing as note investors. What do we need? We need to make sure that paper is created great at the beginning, because then that decreases default. And that's what we always plan for as investors, is what happens at default, at the divorce, right? How do we navigate out of that to get my money back or to get out of this investment, right? So yeah, Grant and Nate kind of came to us with these business notes, and it's a new debt vertical for us. So we're learning too. But the great thing is that they are so open to talking to other investors, to be transparent about everything, because they have a great portfolio that's currently on Paperstac right now that we're selling for them. There's about 18 notes on there. We've got a lot of interest, and the beauty of it is that they've been really open and transparent to where I'm hooking up meetings with them, and they're able to, like I gave you the example, there's a business note on there, there's a restaurant, and the restaurateur was known personally by the guy that underwrote the note. We got the guy that underwrote the note on the phone with the investor. I mean, that's like, when does that happen, right? And I got to ask them, this is a restaurateur. He's been in business for 20 plus years. This is the type of guy he is. I personally know the guy. So as an investor, I'm like, that is awesome, right? So with all being said, that's a beautiful thing to have with that, is that support. And so we've gotten a good amount of people that have reached out to us and said, yeah, we like these. We need to learn a little bit more about it, because Paperstac is our 25,000 user base, right, primarily is in the mortgage note space. Right. And so they're learning these new things, because Brett and I had questions like, well, what happens when they default, right? But that's like, what do you do? And Grant and Nate on our one podcast we had really went through what they're doing currently, and like with a UCC lien, and it's a blanket lien, and it just doesn't go after business assets, right? There's lines of credit, there's everything, cars, there's other things that you can actually go after. Not that you want to, but if you have to, recourse. Right, there's some sort of recourse there. And so, these loans are anywhere where it's netting a 11.49 to 12.99% yield after servicing costs. Because the big thing was, who services these things, right? Servicing is huge. You don't want to service stuff just from legal compliance. Yeah. Who does it? It's all in-house with them. So they're able to just take a percentage, and it's netting currently like an 11.49 to 12.99% yield on these notes. Fully underwritten collateral, institutional grade stuff, bank stuff. Wow. So where they have a charter bank that they have all their loans on their books, right? So it's like all of this stuff is what makes this note sexy and appealing to somebody, instead of I underwrote all this stuff on the back of a napkin and it's like, it looks great, it's a 15% yield, but you're like, yeah, what if something goes wrong? You go to court, the attorney on the other side rips it to shreds.
Yeah.
Now you're out.
Yeah.
Not in this case. You're secure. You know what I mean? They know how to get in and out of the stuff, and their default rate on these things are super low. It's like 0.5% of what, because they did it correct.
Didn't they also have a buyback program too?
They have a depending on which note, like a recourse, right? Some people, like, after 3 months, if they were to go to default, will buy it back or replace it with something. That's a case-by-case basis.
Right.
But we're working currently with them is, how do you really build that note up even more? How do you make it better? And it's, Brett touched on it a little bit. Put a keyman policy on that, which a keyman policy protects that business owner, because we're talking about small businesses here, right? The options for small businesses these days is, I want to buy this business or small franchise. I got to go to the government. I got to get an SBA 7. It's 5 to 8 months of underwriting. It's a nightmare. Yeah, it's a great rate, but sometimes they deny you. Jumpstart, this is where they kind of play in the space, is they're going to actually, underwrite that loan, and they can underwrite and fund it within a month, right? So that's the beauty of it. And speed, efficient, because that's what a business owner wants, right? Yeah. And so that's the beauty of it. And so we're thinking, how do you make that note even protected even more? How do you make it even sexier? And it's providing a keyman policy, right? It's an insurance policy on that business owner. Because if that business owner dies, what happens to the business generally on a small business?
Typically, gone.
Gone, done. Because he's the guy. He's the dude. This isn't a big business. So if you had a $1 million insurance policy on that, the guy dies,
you're paid.
Paid for it. You get your position out, and it's depending on how you set up that trust, where it's the first 10% of that policy will go to pay back my creditors, and the rest will go to the family. Right? That's it. It's a structure where you can go either way. You as a lender, you can say, I want 50% on that, and you negotiate. These are all negotiating terms on how to build it up better. So that's one way of doing it. Another thing is they're trying to collateralize it more with real estate, and try to get the real estate.
If there is.
Yeah. It's if right now we're trying to find out that, look, if this business note, how to make it sell quicker on Paperstac. Paperstac knows mortgage notes. If you're going to say this business is a business note, right, but it's collateralized against real estate.
Right, maybe a physical building or wherever they're at.
Now, as a real estate note investor, you're like, oh, cool.
Cool, yeah.
Worst case scenario is I got a piece of real estate, I underwrite the real estate, I'm good on my debt, so I'm good. So there's a lot of different ways of doing this. We're learning, but I just want to tell people out there it's a great diversification play, because like Grant and Nate were telling us, Brett, right, about it's not tied to the real estate market. It's kind of like, as real estate note investors, it's not tied to the stock market, the volatility of that. Yeah. But the real estate market's volatile. Right. This isn't. This is tied to a business, and this is somebody's business, right? They're underwriting the jockey. Yeah. There's the horse and the jockey. They're going to underwrite that jockey and make sure that, and this is what he's doing full time here. It's not just like, it's a rental home, I'll let it go, you know what I mean? It's, if I default, whatever, and you're holding that note going, oh crap. This is somebody's lifehood. So that's why I think it performs so well, and why it's really attractive to diversify into these, right? So I'm telling people, try one out. You got 50% real estate portfolio, 50% business notes. A lot of people love the idea of small business, but they don't want to own it. Now you can own the note, you can own the debt, and you're in that space. So it's kind of a cool play. You're like, I'm the financier of my Stretch Coach, which is a small franchise about stretching in Tampa Bay. You're like, cool. I'm in the financier on that. So to me, I'm like, that's neat, right?
That's one of them on there?
That's one of them on there.
Oh, really? Yeah, I saw that. Well, it's interesting. So, what are typically the size of these loans?
Yep. Currently, they range anywhere from like 150,000 to 500,000.
Okay.
That's the space that they're actually playing in right now, is like the smaller balance stuff. Nothing big. They are going to start to, I think, underwrite stuff that's a little bit more expensive, like up to like $1 million. And so they're looking at different stuff all the time. And so right now, they have so much origination volume,
There's a big demand.
there's a big demand, huge. It's the silver tsunami, as we call it right now, because all of the baby boomers that are retiring, they're selling their small businesses, and it's huge. I forget what the amount of money
Which
it is.
Interesting, because even for myself, that's something that I've been looking into, because I see a huge opportunity from the baby boomers, you know, that their kids and their family don't want anything to do with that plumbing business, electrical company or whatever, and there's an opportunity of maybe needing some sort of financing to acquire that business, right?
Exactly.
And they need maybe technology to 5x or 10x that business, so it's a great opportunity.
Oh, huge. And they don't want to do it.
Right.
A lot of these people like 75, 80, they've run the business, they're done. So we're also working, which is a really interesting play, is allowing these business owners that are trying to sell, allowing them to offer seller financing on that business. Grant and Nate also play in that space, because when you seller finance something, as we know in the real estate world, you still have to bake the cake properly. You still have to underwrite it right. You have to use an RMLO. You have to make it look, smell, and taste like institutional paper. So going to these business owners and say, look, here's another option, right? Granted, I know you want to sell this thing for $500 grand, $1 million, whatever, we get it. How many buyers have you had? Not that many. Do you want to increase your buyer base? Simply, all you do is offer seller financing. That opens it up to a lot more people that can afford this business, right? But these business owners are like, wait, what? How's that going to work? Well, here's the guys that will actually underwrite this for you. You get a buyer that introduces quick terms, 20% down, whatever it is, and you want to create that paper, but you don't know how to do that. These guys will be able to do that for a fee, right? We create that paper. It's a great looking piece of, it's a great note. Season it up for 6 months, Mr. Seller, and go on the Paperstac and sell it. And they're like, well, do we have to discount it and stuff? Not all the time, but we recommend doing that. So build that into your sale price.
Right.
Because everybody knows, we're all retail guys, everybody wants a discount, right? The institutions we trade with, they don't care about that sometimes, because their mandate is, it's not my money, it's the bank's money. Right. I'll pay par plus because I'm still getting 8-9%. But us investors, entrepreneur guys, I want a deal. Give me a 5% haircut. Great. Price that in, Mr. Seller of Business, $525,000. Sell it for under owner financing. You have to take a haircut after 6 months. You sell it, you recoup your money, and move on. Worst case scenario is you hold it for a year, you're making 12% on your money, and on something that you might not have sold. So that's the macro of this entire business note world, the opportunities, timing, efficiency now with AI, technology with Paperstac, democratizing this to other investors that in the past could never underwrite a business because it's a lot. These collateral files, just to let people know, they're very involved. There's a lot of other stuff going on because you're underwriting the person, you're getting tax records, you're getting all of this other stuff. It's a little bit more robust. You need, let's just say, AI to be able to say, here's the underwriting file. You're a professional underwriter of a business. You're an M&A marketing or M&A expert. Tell me what I need to know and summarize this for me. In the past, a year ago, you couldn't have done it, right? So business notes might not have been sexy for a few people, but not many. So now with all the technology, I think business notes are sexy, they're attainable, and it's a great diversification play.
What are usually, because I know with traditional mortgage notes, typically I'd say 10 to 30 year term, what are typically the terms on those?
On the business notes, the current ones we have are like 10 years, 10-year terms. They're looking at doing different stuff, 7-year terms. They're looking at doing 24-month, 36-month terms, the balloon. Currently, there's no balloons. They stayed away from all that stuff. But what they're learning and what we're learning as we're going with this is what the market's willing to do, what they're looking for. Does somebody want a shorter term with a balloon? Some people do, some people don't. So currently, they're like 10 years, 10.49 to 12.99% interest rates. Like I said, fully underwritten, recourse, some not recourse, but knowing that there's servicing component in there and everything's taken care of.
Yeah, that's exciting, because I was just telling Brett, what's going on with these business loans, because I've been seeing emails, because I'm on your guys' list of investors, and curious to also, as far as what you guys are kind of gathering from all this, is what is the buyer for these notes kind of look like? Is it somebody that, you know, has a portfolio and just looking to diversify? They have a pretty decent knowledge and experience with just regular notes, and they're like, you know what, just...
It's a great question. And what we're discovering during this phase is these buyers, right? We had one guy that was very interested in a mortgage note, right, on the site. Had a phone call with him. He's a retail commercial realtor. So what does he do? He puts tenants, small businesses into strip centers. He knows he knows the small business franchise that goes into retail centers. Yeah. He looks at that. He understands that, and he goes, you know what? Because that was Brett and I and Rick were like, and a lot of our advisors. Well, why wouldn't I just buy a business? Are there people out there that would rather prefer a business note? He said, I preferred a business note more than a mortgage note. Like a really good mortgage note too that he was looking at. He preferred the business note. So right now we're discovering it. Yes, there are people out there that would rather do this because they came from the business broker world, the M&A world. And this is just a different way to play now. Like in the real estate world, right? You can fix and flip a house, buy a rent, and then you could also diversify into mortgage notes, right? And that's kind of fun. In the business note world, it's like these business brokers buy and sell businesses for a living. They have a real estate like they do it. But now there's another play for them. They make good money. Well, what are you going to do with that money? Well, what are you doing now? I'm buying and selling businesses. You're underwriting those businesses? Yeah. Well, take part in some of the interest. Yeah. Finance that thing. Yeah. So now, right, there you go. Bing, that business broker, now that entire world of business brokers, which is huge, by the way, has an opportunity to diversify their 9-to-5 paycheck into something they already know. When in the past, you're deal by deal, da-da-da-da-da. Now you're financing this stuff. So that is the kind of the buyer base that we're seeing. And it's a heavier lift right now because it's that adoption time of like, we're going to be closing, I believe, hopefully our first one in the next week or so, hopefully, right? And that is with this commercial realtor that, you know, and it's a growing process, and I keep communicating with him, which is beautiful, by the way, on Paperstac, because granted we don't have the development to take it from soup to nuts on the closing because it's different. Right. Yeah. There's different stuff, right? But we're able to kind of white glove it. Still use the transaction timeline, still upload documents that way, and then we're going to custom upload the purchase sale agreement. There's an assignment of the UCC that needs to happen at a certain level. We're learning this, and I have to tell him, I'm like, sorry, man. I mean, we're trying to get these updated docs. You know, it's taking longer, and he's like, no issue. But
he understands it.
He understands it, and if he can't wait, we understand too. But what we did is we gained knowledge of a statement of process, like the process we understand now. And so I said to Grant and Nate and Jump, I'm like, well, you know, we're ready. Eventually we have to expedite this and make this more. And they're like, yeah, we understand, and it's going to get better. And because this is their first time really selling notes, so that's what we're seeing too. Is that like these business note guys that finance this stuff, they usually didn't sell it. They kind of held it on their balance sheet.
And I mean, just, you know, thinking about it right now, I can see how that commercial broker can just be like, light bulb going off, like, wait a minute, I'm putting these business owners in these businesses. At times I can see where there could be a need. Hey, by the way, I not only can get you the place, I can get you the funding. I mean, it's
there you go.
Crazy. Yeah.
It's the whole thing. It's like, you know, they're dealing with buyers, they're dealing with sellers. If they're dealing with sellers, what's the quiver in their to have, you know, the arrow in their quiver? Offer seller financing.
Right. Now you open to a whole, you know.
Get a deal done. These guys want deal done, just like anybody. Yeah. And a lot of times it's like financing. What's the hold up for anything? I got a great idea. You know what? Can you finance me? Because without the money, you ain't doing nothing, right? So it's like it's exciting. I think it's going to be a really good thing for us, and we're kind of, you know, managing time with that and both things, and we got a lot of different stuff happening. Yeah.
Awesome. No, I mean, it sounds exciting, and it sounds like it's definitely going to be, you know, a big part probably for 2026 for you guys, and, you know, just the whole space in general. Because, you know, obviously, as we all know, you know, there's a lot of people that are pivoting. There's a lot of people that are looking at different things, and, you know, the real estate space, as we all know, I mean, it's definitely softened up in a lot of markets. It's slowed down. I don't know what you guys are seeing, you know, when you're back in for a lot of no buyers, but I'm assuming it's slowed down a little bit, or people being a little bit more aggressive on pricing necessarily.
Yeah.
You know.
I don't know.
Yeah.
I mean, it's actually been pretty steady with just the note buying, but you're right with the real estate market though, just in general.
Yeah.
It's softening up.
Yeah.
There's some deals that we have out there that should have sold 6 months ago on other projects, and you're just like, it's softening up.
Yeah, I mean, it's interesting. I mean, just real estate, as a whole, as far as the traditional side, it's just really interesting. I mean, I've had so many conversations where some of the stuff just doesn't make sense. It's like, hey, this property should, just like you said, this should have sold. Why did the neighbor sell? Wasn't anywhere as nice, and there's just some weird nuances but that just, it's really funky. And I was just talking to somebody else, because I'm an agent, I'm in this market, and somebody was asking me, what are you seeing as far as buyers? And it was kind of funny. I mean, it's not exactly 100% the case, but I'm like, I feel like it's people with money, people without money. Like, what do you mean? It's like, the cash buyer, they have, money from business or whatever. They're just buying a property, relocating. And there's people with no money, meaning FHA, they're wanting $10,000, $15,000 concessions. They're getting into a property with $2,000, $3,000 down. And there's just, I'm not seeing very much of that in between of your traditional, hey, this person's putting 20% down,
Yeah.
It's interesting.
It is interesting. I'm an agent as well, and it's the market's funky in Orlando. You're out of Florida, Texas.
I'm here in
Texas,
DFW,
yep. Which is never like when we started doing wholesale real estate. Dallas, even though when we went through our kind of dip, you guys just kept going.
Yeah.
Like in Texas, it just was an unbelievable market. But yeah, so it's interesting. That's why I like the diversification into businesses, because people are always going to be buying businesses, right? Selling businesses. So it's resilient. Yeah.
Awesome. So you guys have a podcast, or you were on a podcast for people that want to find out a little bit more in depth?
Yeah, we actually have on the Paperstac podcast an actual interview at the last conference we were at, where they actually sat down and basically we sat down with the guys and
yes, definitely point them to that.
If you're interested in the business note information, we sat down with the two founders, and it was like an hour-long interview. It's really good, really well done.
Yeah, they go through like one of the non-performers that they have and like what they're doing to and it's really, so I tell all your viewers to go to that, listen to that. It's really good education. We're going to be coming out with more stuff too as we find these little things to do stuff on.
Yeah,
so
we got to get more podcasts out.
Yeah.
After a couple hundred, you kind of run out of topics. Start repeating ourselves.
Well, the funny thing is, there's always questions, and you're just like, people ask you questions, and you're like, hey, nobody's asked that. Hey, well, it's a perfect time to just start recording something.
That's usually how I got a lot of topics, was just people would ask something on the phone, or have one guy that's a friend of mine. I was like, what? I don't get it. You got the Paperstac Academy. You went through it. You did this. You got money. What's the deal? He's like, I don't want to insult somebody with the bid. I'm like, oh, that's interesting. How do you not insult someone with the bid? And it's like, that was a whole podcast of just being very mathematical. Like if you just use the 10BI calculator and say, this is my number. This is why I'm here. I want to make this yield. Someone can respect you making a yield. Hey, I want to make 12%, or I want to make 15%. I can't do 15%. I can do 14%. Instead of someone like, you're selling it for 50. I'm going to give you 35. Why? Why are you giving me 35? I don't know. It just sounds like a good.
Yeah, right. Yeah.
You know what I mean?
I mean, I was just telling Brett, just before we started recording that, I recently bought one on Paperstac. That was a repeat seller. He reached out, hey, I got another one. Do you want to look at it? Mm-hmm. And the same thing. I mean, I had to shoot him my number at the end of the day. Why? There was 10 reasons why.
Yeah.
Yeah, you're a good.
And he was really like, from the get-go, kind of like, I understand I'm gonna have to take a discount because of XYZ, and then I just gave him a couple more reasons, and he was like, okay, totally understood.
Yeah.
Mm-hmm. Yes.
I mean, that's it.
You have to just do it.
Because you have to actually
and come back with something that's educated instead of just using AI and saying, what should I offer? You can use that, but then be able to back it up and know why, right? Yeah.
That's good.
So yeah, I mean, for those of you guys that want to learn a little bit about notes, you guys have a full-on, what is it called? Course or
Paperstac Academy.
That's right. The academy they can go in.
Yeah, we have a lot of free guides, stuff on YouTube, and we got a lot of stuff. I mean, we got a
lot of content. We've been doing this a while.
Yeah.
It's funny.
Yeah.
I mean,
just as you said, 25,000, registered users now.
Yeah, it's a lot. I didn't even know
it's a lot. And
it's a lot.
I didn't know they're all out there. I don't know who are these people.
Well, that's what I'm saying, and they continuously organically happen a lot, right?
Like usually 20 people a day, just signing up.
Yeah.
I'm like, okay.
So we're like, I think we have something here.
We're onto something.
Yeah. Well, we had dinner on Monday night with someone that you probably know, but He's like, yeah, I mean, I've talked to Brett a couple of times, and he doesn't even live in the U.S. You know what I mean?
Who, me? No, the guy?
Yeah,
Oh.
the investor. And he's like, yeah, I mean, I talked to him, and, you know, I, you know, did well in the engineering world, and, you know, just been consistently buying notes, and, you know, there's a lot of those people that, you know, they learn about it, and they said, this just makes sense. They want, you know, they want to retire. Really, his whole model is like, hey, I want to live on a beach somewhere, and I don't want to be a landlord. I want to be as passive as humanly possible. So I learned the underwriting, the importance of that, good quality notes, and I just want to collect my, you know, whatever, $10,000, $15,000, $20,000 a month, and build a portfolio.
Well, yeah, we're about to go on stage here in a little bit, and Brett's going to talk about stacking income stacking, income streams, and it's like really interesting strategy that I don't have any idea about, but it's a strategy that he uses that's really, really interesting on how to, okay, you're a note investor, you make all this money, but what's the proper way to then take all that money? What are you doing with it? Like, how are you?
This guy that he's talking about basically does my same system, but he didn't. When I talked to him, I was like, "Do you know about this?" And he's like, "No, I didn't know that had a name. It's what I'm just doing." I'm like,
"That's interesting." He's an engineer.
He's like an engineer.
Yeah, there you go. Yeah, there you go.
All right, well, you know, I appreciate you guys spending a little bit of time, and I'm sure we'll catch up more. I mean,
for sure, man.
I'll be in Orlando. We'll probably, you know, spend some time here in December, and you know, always a pleasure.
Yeah, man.
Everything that you
Thanks
do
for having us on.
Yeah, I'll share all the information on the channel. So
yeah, awesome.
Appreciate it.
All right, man.
Thank you.
See you guys.